everyone, and welcome to The Explainer. Today, we're diving into an absolutely essential tool for anyone trying to navigate the housing market here in the Sooner States. We're talking about the Oklahoma Mortgage Calculator. If you're looking to avoid those sneaky hidden costs and really lock down your financial future before making an offer, you are in the perfect place. So, let's get started. Look, we all know the feeling, right? House hunting is literally exhilarating. You walk into an open house, you see those stunning hardwood floors, that absolutely perfect backyard, and instantly, bam, you're emotionally invested. But here's the real danger of going in blind, falling head over heels for a property before you've actually done the math. Asking yourself, is this dream home actually affordable, isn't just a good idea. It's the fundamental question that keeps your dream home from turning into a financial nightmare down the road. All right, so here is our roadmap for today. 1. Dream homes and hidden costs. 2. Decoding your monthly payment. 3. Setting a realistic home budget. 4. The Oklahoma market difference. And finally, 5. Next steps for homebuyers. Let's jump right into Section 1. Dream homes and hidden costs. Okay, let's dive into this. A basic, generic calculator, it's really only going to tell you your principal and interest. It completely ignores things like property taxes, homeowners insurance, and HOA fees. An advanced calculator, on the other hand, lets you customize all of those hidden costs. Using a dedicated advanced Oklahoma home loan calculator ensures that the numbers you see on your screen actually match the dollars leaving your bank account each month. It's how you completely prevent those nasty surprises. Moving right along to Section 2, decoding your monthly payment. If you've spent, even 5 minutes looking at real estate, you've probably heard the industry jargon PITI. Let's demystify that real quick. PITI stands for Principal, Interest, Taxes, and Insurance. Understanding this simple little acronym is the absolutely crucial first step to running accurate calculations. Why? Because your mortgage isn't just paying back the loan, it's actually covering these 4 distinct buckets every single month. When you're running your numbers, it's so vital to understand how these components interact over time. The principal is what actually lowers your loan balance. But the interest, which is just the cost of borrowing the money, is incredibly heavy in the early years of your mortgage. Over time, that shifts, and a lot more of your money goes toward the principal. On top of that, your calculator factors in property taxes and homeowners insurance, which your lender usually manages for you in an escrow account, plus any local HOA fees. So here's where we hit that magic number you hear all the time. 20%. The calculator is going to ask for your down payment amount. Now, if you put down less than 20% of the home's total price, you trigger something called private mortgage insurance, or PMI. This is basically an extra insurance policy that protects the lender, not you, in case you can't pay. And guess what? It gets slapped straight onto your monthly costs. Seeing that PMI pop up in your calculator is honestly a fantastic motivator to figure out exactly how your down payment impacts your day-to-day budget. All right, Section 3, setting a realistic home budget. And this brilliantly illustrates the golden rule of home budgeting, the 28-36 rule. Basically, your housing costs should not exceed 28% of your gross monthly income. Your total debt, which is that 28% housing slice, plus another 8% for things like student loans or car payments, shouldn't exceed 36%. That leaves a really healthy 64% of your income for, living your life, buying groceries, going out, and actually enjoying that beautiful new home. This is exactly where an Oklahoma affordability calculator becomes your absolute best friend. By playing around with different scenarios like adjusting the home price or maybe the loan term, you can actively protect these exact limits. Keeping housing at 28% maintains your lifestyle balance. Capping total debt at 36% ensures your loan actually gets approved by the bank. And critically, it ensures you still have 10 to 15% left over for savings and retirement. Using the calculator is how you guarantee your home remains a comfort and never, ever becomes a financial burden. Which brings us to Section 4, the Oklahoma market difference. Because honestly, location matters immensely. Here in Oklahoma, property taxes vary a ton by county. For example, a homeowner in Tulsa County, where effective tax rates run a bit higher, around 1.3%, will pay noticeably more per month than someone buying the exact same priced house in Oklahoma County or Cleveland County, where the rates are often lower. This proves exactly why a generic, run-of-the-mill calculator simply won't cut it. You absolutely must use an Oklahoma-specific calculator where you can input local tax estimates to get the true picture. State mortgage rates have a massively high impact on your payment. Seriously, even a 1% shift can save or cost you tens of thousands of dollars over a 30-year loan. Property taxes also have a really high impact, and regional insurance costs have a moderate impact. A fluctuation in any of these three pillars drastically alters your bottom line. You literally have to watch these Oklahoma rates closely and plug them into your calculator regularly. Let's move to our final piece, Section 5, Next Steps for Homebuyers. First off, use your calculator to compare loan types. Fixed-rate mortgages give you a steady interest rate and totally predictable long-term payments, which is perfect if you're settling down for the long haul. On the flip side, adjustable-rate mortgages, or ARMs, offer a lower initial rate that changes over time based on the market. If you think you might move or refinance in a few years, an ARM could actually work for you. Run both of these scenarios through your calculator to see how they stack up against your specific goals over a 5, 10, or 30-year horizon. Okay, we absolutely need to bust some persistent buyer myths right now. So many people sideline themselves because they falsely believe they need 20% down and absolute perfect credit. The reality? Government-backed options like FHA, VA, and USDA loans exist for all sorts of varied credit profiles, and they allow for down payments as low as 3% or 3.5%. Don't let rumors stop you. Discover your actual options, and yes, plug those 3% down scenarios into the calculator to see what the monthly payment, including that PMI we talked about, really looks like. So here are your actual concrete next steps before you even think about touring homes. Check your debt-to-income ratio using that 28-36 rule. Ensure you have 2 to 5% of the home's purchase price saved up strictly for closing costs. But most importantly, get a formal pre-approval. Pre-approval isn't just about showing sellers you mean business. It gives you your actual personalized interest rate. Once you have that exact rate, you plug it into your calculator, and boom, you've completely eliminated the guesswork. Finally, partner with a local mortgage expert who really understands the nuances of those Oklahoma County taxes. You know, there's a great Mark Twain quote that fits perfectly here. The secret of getting ahead is getting started. Stop guessing. Stop letting the fear of the unknown hold you back from finding your home in Oklahoma. Proactively running your numbers is hands down the most powerful first step you can take. Financial control is literally right at your fingertips. By leveraging an Oklahoma mortgage calculator before you ever sign on the dotted line, you completely transform anxiety into absolute clarity. It is the single most important thing you can do before buying. So ask yourself, what hidden costs are lurking in your dream home's price tag? And are you finally ready to uncover them? Go punch in those numbers, dream big, but budget smart. Thanks so much for joining me on this explainer, and hey, happy calculating.